The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. Getting ready for a new moon coming up on tomorrow, the 6th of August. By the way, this will be my last show for TFNN for several weeks because we're going to have a new baby. A new little boy is coming into our family on August the 19th and to be with his 2-year-old brother, and so the family is going to be with them for this big event, which we celebrate quite actively, and it's really going to be fun. So I'll be off for a few weeks. I'll still be doing the newsletter, but the radio show, because of travel constraints and stuff, it's pretty difficult to get it done. I wanted to start the show with what I think is probably one of the more important charts that I've worked on over the years. I've been in this market for, as you know, many, many years, going back to 1959 in August when I put my first trade on. I bought a little stock called Elastic Stop Nut, and my uncle gave me the $400 to buy the stock, and it went from 4 to 8, and I was able to buy my first car. So that was a big. And the car, by the way, was a 1949 Flathead Mercury, and I wish I still had it. Okay, I want to start this by looking at the market from the big low of October of 1974. 1974, the market made a double bottom in the Dow around 500. It was followed by in December by a slightly lower low, by just a little bit. Not even, it was less than 1% slightly lower low in October of 1974. Then the market went straight up until the area of around 1979 or 80. It was right during the time when Reagan got elected. Yes, it was right when the time when Reagan got elected, and then the market sold off dramatically into August the 9th of 1982, and that from the low of 74 to the low in 1982 was exactly 61%. For the next few years, from 1982 to 1987, for 5 years, the market quadrupled in price. It went from around 700 to around 2,800 in the Dow when it topped on August the 25th of 1987, and then had the crash low 6 weeks later on October the 19th of 1987. That, to me, was the most scariest day in the market because we were very close to melting down, and it was really bad. But what was interesting is that low on the Dow that day was around, I believe it was 1667, something like that, but it was within 1 point of the exact 618 retracement of the low that we made in 1982. And from that level, the market went from 1987, we went straight up into 2000. And of course, you remember 99 and 2000, that's when we had the dot-com bubbles and all the little stocks that were octogenarians that ended up being teenagers or less. The market came down strongly, into 2003. And of course, one of the most traumatic events is when we had our, the war on our soil on September 11th. Of 1991, of 2001, and it was that was actually the C leg of an ABCD leg, and then the D completed in early 2003, and then the market went up into 2007 when we had the housing collapse, and then the market had the housing collapse and broke down badly, and again it stopped exactly at exactly the 61% retracement from the 1987 low. Now that was quite a few years later, but it stopped exactly at that low. So since 1974, we've had 4 61% retracements that stopped exactly where they should have stopped. Now let's go back to 2009, when the world was coming to an end, and Henry Paulson was begging the government to give us $700 billion so that we could save all the banks and save General Motors and save everybody except you and I. And I actually didn't need saving at that time. And if this market goes up a little bit more, I'll probably need saving, but we'll see. Anyway, this is my reason for this. I want to get into this because this is the last time I get to talk to you, and I wanted to show you what I'm looking at, just so you realize that I'm not totally crazy, because nobody, I mean, I don't have one person on my side here that thinks this is something really, really ominous that we're looking at. I mean, nobody. I mean, I've got some really good friends who I have, known and loved for years and years and years, and they say maybe, but no one sees this at all. This happened in October of 2009, by the way, but this is the same type of scenario. But if you'll really study this chart, this Dow Jones monthly chart, if you remember 2009, how bad things really were. You had General Electric was trading at 6, Bank of America was trading at 3. It was just the end of the world was there. General Motors went bankrupt, so it was it was really a bad time. But if you look at that point now, at that March of 2009 low, and work backward to 1998, which was the big move that led to the dot-com bubble. If you'll count that and count those waves as 1, 2, 3, 4, 5, and see that was nothing more than an expanding triangle, and the triangle from the high in 2007 October to the low in 2009 was the wave from 4 to 5. That completed that expanding triangle. But what we're having now is that we're having the biggest and longest expanding triangle that I have ever seen in all my years in the market. Now, what could be different about this one? And I realize that I've asked my friends to throw darts at me about what I'm looking at wrong here, and the answers that I get back are fundamental answers that I can't factor in because I don't know any fundamentals. I don't know about what earnings are going to be, and I don't know about what the Fed is going to do or anything like that. I'm just looking at the sum total of all the buyers and sellers that I see here. And so, I'm noticing that the New York Stock Exchange Index has still not made a new high from, way back in May. And there's one farther back than that. So it's still quite a ways from making a new high. Now, we've got 500 S&P stocks, and we've got 100 NASDAQ stocks, and we've got 30 Dow Jones stocks, and those are all making new highs in the index. I mean, some of them aren't, Microsoft, IBM, a few others, but, all in general, those stocks, of those 600 and some stocks, are still going up. The other 5,000 and so have not made new highs as of yet. So those are the things that I'm looking at. But this is a very bearish pattern. Might not work this time, but this is what it looks like to me. Now, I wanted to share with you one of the charts that we have from one of our TFNN listeners up in Canada. I think it's just an incredible chart, and I want to bring it into the room here. I hope you'll be able to, I hope this pops up. I'm not sure if the chart is up yet, but it shows the same thing that I was looking at, only in a little different format. I was looking at it on a ratio of Fibonacci ratios, of 618, retracements going back to the 1970 74 low. This one shows the actual Dow Jones Industrial Average going back to 1974, but what our friend Mike Kay from Toronto did was he measured from the 1974 low to the 1987 high, which was exactly 13 years, and then you can see the 1987 crash on there. It looks like a little blip. Folks, I wish you could remember what that little blip was like. There are very few people that are in this room or any place else that remember that because, it was so many years ago. It was 26 years ago. So a lot of these folks are in here not even born yet. Then from 1987, when we topped on August the 25th, which was a harmonic convergence, that was 5 major planets all at 0 degrees on the exact date. And then the market went from there to the high that we made in 2000, which we made with that expanding 1, 2, 3, 4, 5 triangle that we're looking at right now. And then since that time, the market came down into 2003. with a beautiful ABCD pattern. And then we finally, well, I'm not sure finally, but here we are in 2013, 13 years later, we are looking at the same 1, 2, 3, 4, 5 expanding triangle, but it is the mother of all expanding triangles, and the fathers, the uncles, and the cousins. It's all of them together. Now, we could easily break this, and the market just takes off on a jolly road, just like it did in 98 and 99. The market could go anywhere it wants to the upside, but this is a very bearish happening, to see that this is something that is, I think, is pretty ominous. Whether it is going to be the case or not, it's going to be really interesting. These sequences of 13 years, this is the third one that we've looked at right here, and they seldom go past 13, and it could easily expand to 21. Maybe it's 21 is the Fibonacci this time, and then it expands out, seeing where we are at that particular time. If you're having trouble, seeing some of these charts, I featured it in my newsletter this week because I thought it was important to look at it on a long-term basis, because I think people that are telling us that we're busting in here to new high ground and everything until the New York Stock Exchange Index tells me that that's the case, then that'll be the case. If the Dow Jones goes above 16,000, I'm certainly wrong, and if the S&P goes above 1725, I would certainly be wrong, and all I will do is wait for the next particular signal that I have, and then look at that particular point. I've been very, very fortunate to catch that move down in gold, and I'm very bearish Treasury bonds, and I've been very fortunate with the U.S. dollar via the euro and the Japanese yen. The Japanese yen has just been very good to us. We owe a great deal of thanks to that to our good friend and leader Tom O'Brien, because back about 18 months ago, Tom and I were looking at this, and he coined the term King Dollar, and that was when the Japanese yen was around 75, and it went all the way up to the 103 level. I didn't get all of that, but I got a nice piece of it, and have traded it in between too, which has been fun. So don't worry about me if this thing fails. I'm going to be just fine. I haven't been around this long to sit there and stand in front of the freight train. All I know is that I see the end of the tunnel, and I hear the noise, and I see the light, but I can't see the train, and I'm going to have to wait a little bit longer, because as it gets closer to the end of the tunnel, and that's probably around 16,000 in the Dow, then I would probably take a look at it. Now, we're coming to the end of the first segment, and I'm going to talk a little bit about someone who's in the news quite a bit, whom I know, I've known for quite a while, and that's Martin Armstrong from Armstrong Economics, and I wanted to talk about what he's looking at, because he's one of the people that thinks that we're going to have a little correction here at around sometime in early August, but then we're going to go up for the next 2 years. This would make the Bradley model totally wrong. Okay, we've got to take a little break here. We'll get back. We'll discuss this a little more.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we have a call from Alex in New York. Are you there, Alex?
Yes, I am. When you were going through the indexes, I am long the IWM and also TNA, which is the 3 times the IWM. And that's 2,000 stocks, as I understand it. Isn't that at all-time highs?
Oh, yes, it's definitely at all-time highs, and it's certainly going, up as we speak. And I feel very fortunate that you're long that stock. In fact, I think you should feel ashamed of yourself. You're taking money away from somebody that's short. I'm joking, Alex. I'm joking, but I think it's a wonderful. That. You've done a great job with that, and you deserve all the money that you get, my friend. Believe me. But it is 2,000. What I worry about the Russell 2000 is these are all small caps. 20 million or less, I believe, and these are very smaller companies, so it's not the same as when you're looking at the New York Stock Exchange Index. When you're looking at a couple of those stocks on the New York Stock Exchange Index would probably equal about 2/3 of the value of some of those small cap stocks. But it's a good index to trade. I don't trade it, but it has been going straight up, and it is a smaller one. But you're right, and it's making the same type of pattern. It's making this very large AB equals CD pattern that we've had here for quite some time. So just be careful in here and, use the stop and let it go till you think it's finally finished.
Yeah, and I'm also in a biotech fund, and, they've been red hot.
Okay, well, you're doing the right thing. As a matter of fact, I'll talk to Tom and see if you'll take over the show for me. That would take a little extra pressure off of me, and then we'll call it Alex's show, and then you can do just great.
Well, I sometimes feel sorry for you guys, and even last week I heard Tom saying how he was fighting, he was shorting, and you had that big update on Thursday, and some client came into his office and said, "What are you doing?" And he says, "I'm getting killed is what I'm doing."
This is the best call I've got in 7 years at TFNN. You know, you're absolutely right, but I can promise you this, Alex. Don't worry about Larry, okay? I've been doing this for a long time, and I get beat up once in a while. But at the end of the day or the end of the month or the end of the year, I ended up coming out okay. But the way you describe that is absolutely correct. There was a client at Drexel Burnham when I was there. I have to tell you this funny story because we had three rabbis were stockbrokers in the office because it was right after the recession, and the religion business was down quite a bit, and so they were stockbrokers besides being rabbis. And one of the guys came in who was very famous, and he walked into Manny's office, and he said, "You know, I finally figured out this stock business," and I could hear him, so I walked over, and he said, "Well, what is it?" He says, "Well, if I go long, I lose money, and if I go short, I lose money, and if I don't trade, I miss a hell of an opportunity." And I think that pretty much described how some of us must feel here when we're doing a radio show and you were looking for something to happen and it hasn't happened yet. But you're right. You should do your own thing and follow your own judgment because it's your money, Alex, and nobody else's. You're the one that makes it count.
And you know, I do have a trailing price to sell at, and it never gets near it.
Well, then, just keep it that way then. Don't listen to anybody else. I appreciate you listening to me, but, you know, you're doing the right thing. I think, I listen to Basil before he comes on every morning. He does a fabulous job of telling people, you know, where to put stops and, you know, what to look out for and warnings and stuff. And I know when the market turns down, if it ever does, you know, Basil is going to be there, you know, right on top of it, just like some of the other ones will be too. But you've got to be able to do your own thing and take responsibility for your own trades. That's, you know, really what you have to do. You know, I frankly...
No, I just think everyone who has made a lot of money on paper on the long side should just have a stop underneath the market.
You make it sound so easy.
Well, I wouldn't short this market. I really wouldn't.
Well, then you shouldn't. You should keep your stop in and, you know, go from there.
What happened to the trend is your friend?
Well, it is. Isn't the trend your friend? You're doing the right thing.
Absolutely. That's why I called you up. You seem so negative today. I said, gee, what happened to the trend is your friend?
I'll tell you what, Alex, you have made my day and you've made my month. This is my last show for the month, and I'm going to remember your call probably more than any call that I've had over the past several years because you've explained investment. You ride with the trend until the trend stops, and then you go down. That's pretty much the bottom line, folks. I want to be the first to subscribe to Alex's newsletter. Alex, thanks for calling in, my friend.
Thank you. I like your show.
Okay, thank you.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I want to thank Alex from New York for calling in. That made my day, my week, and my month. And this is just the first of the month to set everybody straight that you just buy when it's going up, and when it stops going up, put a stop in and get out. And that's pretty much what Basil does. He does a great job of, following the trend and, looking at stuff like that. What I'm trying to do here is I'm looking at something really big. I could be wrong, but and I might be. It's no big deal if I am, because the risk here is really, really small if that's the case. We do have some strong astrological things. I have to talk about Martin Armstrong here in a second, but we basically have some big things here. We have the new moon coming in tomorrow, and we have the moon on the equator, which is also very important, and we also have the moon at apogee. So all of those are in line, and whether that's going to cause an earthquake anywhere in the world of magnitude, 7.5 or better, I don't know, but usually when those factors are set up like that, you'll get something, seismology that'll make the world shake up a little bit, but we'll see what happens. When we were talking to Alex about the market, I have to tell this funny story. Back in it was in the early 70s, we used to get our charts for commodities by a special delivery on Saturday morning. They were commodity perspective charts of all the commodities, and they came in on the 11 by 17 booklet. And each page was a different chart, and I used to do my charts on my Lazy Boy, my big recliner that I had, and my daughter was about 5 or 6. She used to like to jump up on my lap and watch me do the charts. And she had her little ruler. I remember this little ruler. It was from Speed Racer, the comedy series, and we sent away for it. And it was a nice little 9-inch ruler, and she would draw the lines on the chart and stuff like that. Well, when I was finished with the charts, she would take them back to her room, and she would draw the lines in and color them out, and then she would tear off the page and put it on the refrigerator. Well, I would look at it, and she would have them all colored in, and I could see all these triangles, and they were just beautiful butterflies and gartleys. It wasn't until 1986, 87 that I actually found the butterfly pattern. So out of the mouths of little kids comes some great wisdom sometime. Okay, let's talk a little bit about Martin Armstrong. He's been around for a long time, up until 2000. He was one of the gurus of the market. He got in some type of trouble with the government where he would not divulge some information, and so they basically put him in prison with no trial, and just kept him as a political prisoner. He finally got out in 2011. I first met him in 1988. I was invited to speak at the Foundation for the Study of Cycles meeting in California. He was one of the speakers. Paul Volcker was there. It had just been taken over by Paul Tudor Jones, and he was there, and a whole bunch of other my friends were there, and they asked me to talk about my book, Astrocycles. The Foundation for the Study of Cycles always believed in the astroharmonics in the market and had huge libraries about it. And since my book was, got some type of award, I don't remember what it was, but it was fun, to go there. And anyway, he was there, and I was one of the first speakers, and there was a 2-day event, Saturday and Sunday. Well, at the Saturday night cocktail party, there was a young lady there that came up to me to tell me she enjoyed my talk and everything, and she asked me, said, "Did you hear Martin Armstrong speak?" And I said, "Yeah." I said, "Yeah." He said, "No question." I said, "The guy's a total genius." I said, "But frankly," I said, "I've never met anybody that's so consumed with himself." I said, "I can't believe it." And she says, "Yeah." He says he is sometimes. And I said, "Oh, do you know him?" And she says, "Yes, he's my fiance." So you talk about good timing. This is my day for laughter on CNBC, or CNBC. Sorry, Tom, on TFNN. Alex took me total off guard. Okay, let's get back to the markets here. I posted into Tiger TV. It must be time for a vacation because I can't get over the first caller. Okay, we're going to talk about the rest of the markets going back about 10 years, and you can see all the European markets are still not making new highs. Whether that means anything, because they certainly could, very easily, and we'll see what we're doing. Yes, this is TFNN. It is not CNBC. So I want to make that clarification and give my apology to Tom, but we'll see it. I'm sorry, but Alex from New York caught me off guard so badly that it was just too much of a thing to bounce back from so quickly. All right, I want to switch over to the gold market here because. We have a situation happening where we could have made a incredibly important low in the gold market on over the weekend. I think what I'll do is I'll put the gold and silver chart up together because that's probably the easiest way to see it, because it's very, very simple to see this level once you get to this point, and that is when we made our low in silver and gold on Friday. The low in silver was at the 1920 per ounce, which was the 61% retracement of the whole move that goes back to June. So over the last 3 months, we made a 61% retracement. In gold, we came down and we made a perfect 382 retracement at the level of $1,282 per ounce. So as long as those hold, we have a probability of gold going a great deal higher. However, that $30 rally in gold is not very much, and it could easily give that up in a matter of a few minutes. So as long as we hold 1282 in gold, it looks like we've got a chance to go a great deal higher. Now in gold, we didn't even take out the lows from July 17th. We just made a 786 retracement from that. So that's that's basically what we're looking at in the gold and the silver. They've made very important lows last Friday, right after the non-farm payrolls report. Now, and I can't see any relationship between non-farm payrolls and gold and silver, folks. I know the market moves because of those things, but as far as non-farm payrolls moving, gold or silver, it's just the fact that that's how the traders perceive that is what's happening. But fundamentally, I can't imagine what it could be, that would make gold and silver, move something, of that nature. Since we're on the metals, I wanted to talk just a second and more about the copper market. Where the copper market is still in a very, very negative situation, and if this bull market in stocks is going to go, straight up like everybody says it's going to, then copper is probably one of the most undervalued commodities that you're going to find, and we would look for a good buying opportunity in the copper. But first we have to get through this week in the stocks and see what's going to happen from that point. But we'll wait till the market tells us what it wants to do, and we'll see what's happening with it on the longer term. Someone asked me a question about the why are some of the Dow stocks like Microsoft and IBM and one of the other ones I can't remember that he told me, are not performing well. That this is a market of stocks, not a stock market, and there'll be stocks that don't perform well. Look how badly Apple performed from 700, down to 385. Now we're having a $100 rally in Apple, but when the rest of the market was going up, Apple went down. So you have to factor that in. Each of these has their own, they dance to the tune of a different drummer. Each one is different. That's why when you're trading indexes, you have to realize you're trading an index of stocks. You're not just trading one stock. And that's an important thing. Back in the early 80s, there was a thing called the Value Line Index, which was pretty much what the small cap index, the Russell was at that time, because it had a lot of small stocks in it, and it was a very, very popular index. It equaled the NASDAQ index, because the NASDAQ had just started in 1971, so it was only about 10 years old. The Value Line out of Kansas City was a little bit older than that, but what happened was the stocks of the NASDAQ went crazy, and the stocks of the Value Line just totally dissipated, and I don't even know if they're still in business anymore. I really don't. I haven't seen anything on them in years, but that's what happens, is that these trends change on what people are watching, and that's why it's very, very important to remember these things, because when you're trading an index, you have to realize what that index is made up of. That's why when you're trading the U.S. dollar index, you're trading the euro 53% of the value of that, and that's why you keep an eye on those, because if you're watching the euro, so goes the U.S. dollar. That's that's basically the bottom line of what we're watching here. On top of everything else, I have a data problem today. I'm not going to get the data that we had hoped we would get. Now, someone asked a question about December corn, and since this is the last show that I'm doing for a few weeks, I want to bring up December corn here, because we've been coming down here for a long period of time. I've just posted that into Tiger TV to take a look at it, and our good friend Mr. Z in the Tiger room there was looking for a price of, I believe, $4.35 a bushel, and we're only 30 cents away. As you remember, we tried buying the corn down at the level 425. I was just corrected, so it's another 10 cents lower. We're still 40 cents away. But you remember when we got down, to the $5.15 level. We had a really good buy signal. The market gave us well over $2,500, and it was still in a downtrend. And then it has since gone down and made a much lower low, and it looks like on a daily basis we're going to be coming down. The same thing is true of soybeans. We've got more to go to the down leg on soybeans, but I think there's a possibility of soybeans making a bigger crop, making a bigger low down here that might give us, a good thing. Yes, there is a bumper crop corn occurring, but it's still occurring. This is August. They got to grow all through the rest of August and into September, and believe me, there's a lot of things that can happen. You can get wet weather where they can't get the corn out. There can be an early frost. A lot of things can happen. And also, remember that the cure for low prices is low prices, because when the prices get low enough, demand will come in and start buying this stuff because they can't replace it at these prices in China and India and other places like that. So you have to be able to to realize that this is something that you want to be able to. That's why trading pattern recognition is far easier, because when you're doing that, you don't have to worry about what the fundamentals are. You just want to wait and see, what we're watching, at that one time. Now, I wanted to show, I think it's very important here, because I know our friend Mr. Z has a price objective of $4.25, but I think if you take a look at the really long-term price of corn going back the last 3 years, you'll see the low we had in 2010 down at $4 a bushel. We rallied up to $650 a bushel, and the 786 level of that whole move comes in exactly at $4.55. So we could be 8 cents away from that move. So that's the one that I would be watching, is the $4.55 per bushel level, at that particular spot. That would be the one that I would be watching more than anything else. So whether that's going to be true or not, we'll have to wait and see. But corn trades very nicely. I mean, it trades a quarter cent at a time, which is $12.50, and each penny is worth 50 cents. So for it to move 10 cents, which is $500, that's a substantial move in corn. So you don't have to risk more than 10 cents, $500 in corn to be a farmer. I mean, that's that's basically the bottom line of what you're looking at, and so it makes it pretty good. So we'll keep an eye on this. I'll probably bring something out in the newsletter next week, to look at corn down at this area between 455 and 425 to see if we get to that level. We've got another ABCD pattern forming in corn that could very easily take us to that level that Mr. Z's looking at, and boy, that's pretty much spot on. If you take a look at the one that we're watching, there's a huge ABCD going over the last 18 months that would take us right down into that level of around that 425 level that Mr. Z is looking at. And he is a really consummate technician. He's a great trader, and I'm happy to count him in my friend box, because he's a really smart dude, and it really makes it really nice. One other thing about the corn here is that I think is really important. I'll just to bring it out a little bit to let you folks see it if I can draw it in correctly. Well, I drew it incorrectly. Now I want to see if I can draw it correctly, and that is to show you the pattern that we had with the expanding triangle that we had in the corn when it was making a new high. We had the same situation in corn with this expanding triangle way back in August of 2012 that we have going on in the stock market right now. This is I keep talking about this pattern, but we'll wait and see if it is. This is the first time in my recent memory where I have gotten so many phone calls and emails from my friends about, gee, you're really wrong. Don't be foolish and stay short stocks, which I won't do. Okay, take a little break here. We'll get back and wind her up.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I wanted to put up the chart of gasoline futures because for 2 reasons. One, we're making a potential double top in the oil up at 109 a barrel, but also the fact to show you this expanding triangle that called the top in the crude oil, in the gasoline market a year or so ago, before it had a break of 40%. That's the same pattern we're looking at in the Dow Jones and some of the other stock indices. I've also posted into the Tiger TV the chart that Alex talked about from New York when he talked about being long and just been raising his stop all along, and that's certainly true. A great trading way to do it because, since April, 22nd, we've had a little bit of a correction that stopped exactly at the 61% retracement on the full moon of June 24th. That was when we made the really nice Gartley buy pattern in the S&P and the Dow and the NASDAQ. Everything was coming together, and it was right at the full moon. Now we have a new moon coming in, which is tomorrow, and we have several other events that are occurring at that time. We had some P-index dates occur on Friday. We have another one today, and the last ones are tomorrow, which are on the full moon. So we've had a lot of things happening here. Whether that's going to stop it or not, I don't know, because if we get above 16,000 in the Dow and 1725 in the S&P 500 futures, then I would think that my analysis here is certainly wrong, and you want to just ride up a little bit farther. But we do have a new moon that also marks, I don't know if you folks know this, but in the Muslim calendar that marks the end of Ramadan. I have some friends that are Muslim, and they've been on they have a daily fast where they fast for 18 hours every day. And that ends today, so I'm, send along my best wishes for them, because anybody that can fast for 18 hours, is, far better man than I am. I certainly can't do that. But anyway, this Russell small cap has made new highs. Now, when you stop and think that the New York Stock Exchange Index, which is the bigger index of all, has not taken out the high of May 28th, which was also a full moon date. So there's a lot of divergences happening, especially with copper, in the overall broad market. There's no question about that. I'm beginning to believe that, when I look at this and I realize that you've got all these stocks like Priceline and LinkedIn and Google and Apple and some of these stocks that have gone up, double, triple, 10 times. Tesla, this is very reminiscent of what we had in 1999 and 2000, but I will never see another time like 1999 and 2000, because that was a once-in-a-generation thing. And, again, I was very, very, bearish the last 3 months of that run-up and missed the last part of the run-up, but I caught all of it on the way down. So I want to let Alex know that I'm going to be okay no matter what happens, because I trade a lot of other things besides stocks. As a matter of fact, I've had some pretty good trades in stock indices, over the last few weeks. I've tried it a few times on the short side, but I've also had some winners on the long side. So it all averages out. The ones that I'm watching now, the most important, I think, are gold holding this 1282 per ounce level. I think that's very important, and also Treasury bonds and Treasury notes. You have to watch those, because we made lower low in Treasury bonds last week, but we did not in notes. Notes stopped at the 618 and held. And if the bonds also made a lower low, but they held also. So we should be showing a little bit greater ones. Then we got to take a break, live every day in an attitude of gratitude, and may God bless.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.